broken my heart so many times I stopped keeping track. Talk myself in, I talk myself out. I get all worked up, then I let myself down. I tried so very hard not to.
Good morning, good morning. We'll be going live real soon.
I thought every possibility. And there are some days that all turn out to make me work so we can work it out. And I promise you, that I'll get so much more than I can. I
Just haven't met you yet.
I might have to wait, I'll never give up.
I love this one. Yes, real estate sales. Yep, for sure. I think the portion where it says what I actually do, I mean, there's a lot more to that. There's a lot more to that. Well, welcome. Good morning, everybody. It's Monday, December 13th, and welcome to Ask New Home Know-It-All, right? It's where you can come in, and I'm monitoring the chat, so to say, and we'll answer your questions if you have any questions. You know, basically individuals that are in the market for looking at purchasing a new home now in the near future, or a little bit later as well too. You know, whenever, or you know, I have a lot of professionals that will jump on board and want to ask me questions as well too. So kind of a stump the stumper. I've gotten that very often. But you know, I enjoy the banter back and forth, right? So today, it's coming to the end of year, and holidays are already upon us, right? We've just passed Thanksgiving, and into going into the new year with Christmas coming up really fast, really fast. Gosh, faster than I thought. This year has really just kind of sped by with lots of stuff happening. It was the same thing last year as well too. So I kind of thought I would sum up the episode today with talking about, or maybe asking the audience if you've heard some buzzwords, or let's talk about some of the buzzwords of real estate today, right? Home purchasing, home buying today. Buzzwords that are coming up, right? Some really interesting stuff. I mean, stuff that I think that in all my time of selling homes, I haven't come across until now, and very interesting, interesting times. And I think that things have changed in a way where these things are going to be with us for a while, right? So for instance, the all big bad acceleration clause. These words, wow. Where did this? I mean, maybe I think that you might hear something like this in commercial or commercial real estate, or in some sort of other capacity with heavy duty contracting, purchase agreements, and stuff like that, right? I'm going to post it up in the chat just so that you can see an acceleration clause, right? A provision in a mortgage that provides the lender the right to demand payment of the entire principal balance if a monthly payment is missed. Acceleration clause. So I think today people are really concerned with risk management, right? Especially today, people are trying to get into homes so fast, so quick, and really because interest rates are volatile, inflation, the dollar is volatile, right? our income, that's volatile. And we all want to get into a home because home prices are rising, right? So, because they can get to a point where it's not affordable anymore, you know? Just like a Ford truck, or I mean, it used to be very affordable, but today, I don't know that that's something that's even in my my realm of affording one. they're quite expensive if you want to buy one today. Yeah, well, not for what I need it for, anyways, right? But really, really interesting that these kind of things are being talked about, right? So there's another one called appraisal waiver. Appraisal waiver, right? And I'm going to put that in the chat. And so I'm getting these from online, right? So an appraisal waiver. So if you're doing a mortgage, the mortgage company, I mean, they're taking a lot of risk, right? So the appraisal waiver is this. An appraisal waiver allows the qualified home buyers to skip the in-person appraisal process when buying a home. Instead, lenders use data generated by an automated underwriting system to determine the value of the home based on the information that it has collected from other recent home sales in the buyer's area. Very interesting. Imagine that, right? Appraisal waiver. This does not happen often, but I've heard this phrase this year quite often. So these are the kind of things that are just popping up, right? Popping up. So if you have any questions about it, gosh, I mean, there's lots of individuals that are talking about appraisal value and home prices. Where are we? I mean, are they true? I mean, market value, that should be something else that's on my list, but it's a matter of what someone will pay for what someone will sell a home for, right? It's combined, right? Market value is determined by this: what the seller will sell the home for and what the purchaser, the buyer, will buy the home for. That's how market value is determined. So your appraisal value, I mean, that's based on risk from individuals that are lending you the money to purchase the home. Yeah, appraisal value. The opinion of the property's fair market value based on an appraiser's knowledge, experience, and analysis of the property. Now, that's very long, legal description. I actually got that from HAR, so Houston Association of Realtors. So that's how they're defining appraisal value, or how that's defined, right? Appraisers are really stretched today. I mean, I have had so many customers going into closing in the next few months, or in the past few months, where if you didn't order your appraisal, you have to ask appraisal company to assign an appraiser to your property to get evaluated. If you didn't order it up early enough, it could delay your closing because they can't get to it. There's so many homes closing. It's crazy, right? There just aren't enough individuals. And here's that word: capacity. Being able to handle all the business that you get. I mean, it's great that everybody's busy in real estate business, but it's really tough right now for supply and servicing, right? Home inspection. Interesting. Home inspection. So let's talk about that, right? I mean, I think customers, they generally understand it. People that are buying a home understand what a home inspection generally is, right? Okay, let's see how it's defined, right? A thorough inspection that evaluates the structural and mechanical condition of the property. A satisfactory home inspection is often included as a contingency by the purchaser, contrast with appraisal. I'm going to read this again. A thorough inspection that evaluates the structural and mechanical condition of the property. A satisfactory home inspection is often included as a contingency by the purchaser, contrast with appraisal, right? So with that, it's not about paint touch-ups and caulking touch-ups and um, maybe there's a little bit of a chip on a piece of wood someplace. That's not mechanical and structural, right? So a thorough inspection that evaluates the structural and mechanical condition of the property, meaning how the home operates, right? Does it service? Does it still serve as a proper and safe structure? Shelter. So that's how it's defined. I think most of us, before I read it, thought it might encompass everything, every blade of grass, every wall full of paint. But it's not. It's not. It's structural and mechanical. Remember that, right? Because these individuals, they're state certified. They have to take tests and get renewal, continual education to know what coding is safe and proper for structure and mechanicals. So they have to focus on these sort of things, not design issues, right? Anyway, so I didn't want to harp on all that, but that's a very, very interesting thing that customers and people that are in the profession really need to understand, right? Those cosmetic things are something that either can be discussed or negotiated between buyer and seller. But as for home inspection, generally it has to do with codes, city inspections, things like that. I mean, you can't get around that. That's what it is, right? Oh man, this is an interesting one. Now, who knows what a bridge loan is? If you know, go ahead, comment. If you've done one, even better, comment about that. How was your experience, right? This is not something that's new, but I think it's a buzzword today, mainly because the shortage of inventory of homes for sale and people wanting the convenience or needing the convenience of not moving so often, right? Not moving so often. So a bridge loan, it's okay. So I'm going to give you the definition, and then we'll talk about it. Right, a form of second trust that is collateralized by the borrower's present home, which is usually for sale in a manner that allows the proceeds to be used for closing on a second house before present home is sold, also known as a swing loan. So, what does that mean? What does that mean? All right. So, meaning someone that can get approved or pre-approved for a loan to purchase a new home, even though they have a home to sell, but the form of second trust that is collateralized by the borrower's present home. So using the present home as collateral to purchase the new home while they wait for the old home to sell. This is generally what it's used for, right? So I'm going to give an example, right? Someone living in a home has some equity and they're going to sell it because they need to upgrade to another home, a bigger home. They go out, find this bigger home after they talk to the loan company, mortgage company. Not every mortgage company does this, right? And not every mortgage company is even going to know how to do it. So, by the way, Nancy's company knows how to do this. Okay. Nancy, my wife, she's in mortgage, by the way. Anyways, they're looking to upgrade. So they go out, they find a new home, right? They get an approval to go get to sign a contract and purchase agreement, even close on the new home, even while still owning the current home, the older home, and putting it on the market for sale. Usually, there's a time period of when you have to sell your old home so that you can refinance into the new home. It's very complex. So I don't want you to take this very, very brief conversation and think, okay, I know all about it now. No. Talk to a loan professional about this. But this is all a buzz right now. Why? Because it's something that's really, really something that people want right now, you know? Well, I would say I think that they always wanted it. It's just become something that's more and more available. More lenders are becoming better versed in it as well too, right? So yeah, something you want to know about, go ahead, ask us all about it. You know, question for everybody: who would want to do a loan like this? Who's in a home now? I mean, you're not a first-time home buyer, but you came on to kind of see what's going on, right? Yeah. If it's something that you might be interested in, go ahead, put it in the chat, right? I'm also going to put a calendar invite in the chat, so that if someone wants to book an appointment with me, that way you can book an appointment and talk to me a little bit more in depth later about it. Because these are things that obviously take a longer conversation. It's not going to be something that's just going to be on a podcast, and you can really understand it. It can take an entire show on its own just to talk a little bit more about these specialized loans. Now, I'm not a licensed loan officer. I'm just well versed in kind of the real estate realm, and know that these wonderful programs, services are there and they're available. It just takes a conversation with someone that is a counselor, as a counselor that is that has the ability to talk to you, find out what your needs are, and figure out what to kind of help with the prognosis, help with your moving forward, right? What to do, So you can talk to your real estate professional as well too, whether they know about it or not. I mean, they can give me a ring if they want to. Yeah. Anyways, let's move it right along. I'm kind of going alphabetical order in case you didn't know. Appraisal value, bridge loan. Okay, so a buy down mortgage. Buy down mortgage. What is that? It sounds good, right? So a temporary buy down is a mortgage on which an initial lump sum payment is made by any party to reduce a buyer's monthly payments during the first few years of a mortgage. A permanent buy down reduces the interest rate over the entire life of the mortgage. Interesting. So say you're waiting on some money, but it's not going to get here until after you close on your home. Well, you do a temporary buy down, right? Talk to your mortgage professional about this. It's really, really kind of cool, right? I want to talk about closing statements. And there's lots of acronyms. There's lots of synonyms for this. Closing statements, settlement statements, a letter estimate or a lender estimate, lending estimate, HUD statement, HUD 1. There's so many things that these lending companies and all call it, right? So these are HUD 1 settlement statements. Okay, so lenders have to disclose to you what your closing costs are going to be, right? So I'm going to give you the definition. A document. Oh, hold on, folks. It's a document that provides a itemized listing of the funds that are payable at closing. Items that appear on the statement include real estate commissions, loan fees, points, and escrow amounts. Each item on the statement is represented by a separate number within a standardized numbering system, right? The totals in the bottom of the HUD 1 statement define the seller's net proceeds. It defines the seller's net proceeds and the buyer's net payment at closing. The blank form for the statement is published by the Department of Housing and Urban Development. So these are standardized, okay? It's called the HUD-1 statement, as also known as the closing statement or the settlement sheet, right? So again, like I said, it's called all these different things, and just depending on what kind of conversation you're having, right? But your loan professional will definitely know what you're talking about when you ask them for a HUD-1 or a settlement sheet, right? To ask them to see one, so that you can really define and see exactly where all the money's going, and it's has to do with them disclosing to you everything is there, right? All the fees and all this stuff, so you know what's going on. It's a very important document. I think lots of individuals, and I see it all the time. I see this all the time. Customers are out and they're shopping for a home, and they come and tell me they did a pre-qual. They did a pre-qual application. Well, I'm approved. I'm pre-approved. But meanwhile, all they did was go online and do an application with their bank or whatever it is, whoever it was. They just did an online application, and it just popped them a quick email back. So, oh, you're pre-approved for $1 million jillion. That was it. That was the consistency of their conversation. Zero. It was zero conversation. This, I got to tell you, is not enough not for you as a buyer, not for a seller. It's just not enough. It's great. Yay! I know that I can possibly purchase a home, and I will say possibly, right? Because until you see what's on that HUD-1 settlement statement, or you see what a lending estimate looks like for you, just because you're approved for $1 million, the payment's probably what? I don't know, $30,000 a month. Do you want that kind of payment? No. Well, you may be approved for a certain amount of money, a certain amount of price, but do you want that monthly payment, right? So what are you willing to accept? So that deserves that longer conversation, right? And the only way to start that conversation is by getting clarity with these statements, these settlement sheets. Okay, ask for it. They'll gladly give it to you, and make them explain it to you. Because unless you're in the business, you need to know a little bit more about it, right? Anyways, okay. So if you want to talk a little bit more about it, let me know. I am in the chat. Schedule an appointment with me. I'm here to talk about it. Yep, for sure. Maybe help you find a home too. Yeah. Okay. So lots of oh wow. Okay. So there was some statistic I read, and I'm sorry, I cannot, and don't quote me. I'm not maybe sure that I'm not probably sure exact numbers, right? But I think that they said there are millennials coming to about the age of 30 this year, and there were an enormous amount of millennials that have gone into the real estate market. That's why demand's so high, right? Well, it's part of the reason why demand's so high. It's going to continue on year over year, because every year for, I don't know, what is it, the next 15 years, that you have more millennials coming of the age of 30, right? And which is right about the time, in or about, where their income is there. They can purchase a home. They're getting married, having kids, and all this kind of stuff. They're moving forward with real estate. So we're just going to see more and more of this, especially with all the stuff that's going on. So that leads me into the next one: community property. Community property. In some Western and Southwestern states, a form of ownership under which property acquired during marriage is presumed to be owned jointly, unless acquired as a separate property of either spouse. Community property. So why is that important in Texas, Houston? Right. So I get a lot of people that are like, oh, well, we want to wait until we're married, or they get into a loan process and all this kind of stuff. And then they get hitched legally, file taxes that way too. And it messes with messes with their finances. And sometimes that's good. Sometimes it's not so good. But I want you to understand. So here in the state of Texas, legally married, right? You are if you're on the loan and your spouse is not, they still own the property with you. It's community property, right? So they have interest in it. I think that's the word. They have interest in the home, right? Moving right along, hazard insurance. Simply put, it's homeowners insurance. Insurance coverage that compensates for physical damage to a property from fire, wind, vandalism, or other hazards. LTV, loan to value percentage. Loan to value percentage. This is dialogue that I think every customer ought to get to know, right? It's the relationship between principal balance, and I'm reading this off of HAR, right? Principal balance of the mortgage and the appraisal value or sales price of the lower, if it's lower, of the property. For example, a $100,000 home with an $80,000 mortgage has a LTV or loan to value percentage of 80%. Okay. Now, why is this important? Because different loans and you may fit into different loans, have a different loan to value percentage. I've seen 5, 10, 20, 30, 35%, right? All kinds of different percentages. Okay. The all famous, and everybody should know, you should know this acronym, PITI, P-I-T-I, principal, interest, taxes, and insurance. Principal, principal, interest, taxes, and insurance. So these, very important to know. Broken down, principal, how to what you're paying on the home every month, right? Interest, the interest rate. Taxes, you're always paying taxes in the area in real estate. And insurance, remember we talked about the hazard insurance, right? So these comprise your monthly payment, okay? You want to make sure when somebody gives you a quote that they are quoting you principal, interest, taxes, and insurance. Just say, hey, is that PITI? They'll say it's PITI. If it's not, they should have them explain what it includes, right? Don't ever assume what a mortgage payment is going to be just because they say that's your mortgage payment. Ask them what it includes. Mortgage insurance premium. Oh, this is the big one, right? The amount paid by a mortgage for mortgage insurance, either to a government agency such as a Federal Housing Administration or to a private mortgage company. What is that, Alex? I'm already paying homeowners insurance. This is completely different. The buyer must pay mortgage insurance on a mortgage so that the mortgage company has some sort of assurance that they're going to get paid for lending you this money, unless you put enough equity down. And it also is determined by the type of loan that you're going to do. Currently, today, in FHA, a Federal Housing Administration loan, you're paying mortgage insurance, MIP, for the life of the loan. For the life of the loan. The only way to get out of that is to get a different loan or pay it off. That's the only way to get out of that. Okay? So very important. This can be quite a bit of difference, right? Either way, you're going to have to use capital, cash reserves, money, or equity in order to offset this or to get rid of it. Okay. An origination fee. Very, very interesting. We're counting down the minutes, and I'm not going to stay too long. I'm going to kind of sum it up in here in a minute. Origination fee. It's a fee that a mortgage company will charge to originate your loan. Okay, here's the definition. A fee paid to a lender for processing a loan application. The origination fee is stated in the form of points. 1 point is 1% of the mortgage amount. Origination fee can come in different sizes, and percentages, and dollars. It can be a flat fee, it can be anything. But you can just always ask your lender if there's an origination fee. Okay. Let's see. We're almost there. We're going to run a little long. Survey. A drawing, a survey, not a survey like take a review survey, a survey, a drawing or map showing the precise legal boundaries of a property, the location of improvements, easements, right of way, and encroachments and other physical features. I don't think that's a buzzword today. It's always something that I think that buyers should learn to interpret and see. I think that you want to know how much land, what's yours, and that everybody has everything correctly. And you want to be very familiar with what kind of easements and how your home sits on the home site. Yep. Title insurance. That protects the lender as well too, right? Against any loss arising from disputes over ownership of the property, right? So that somebody doesn't come along and say, I'm sorry, you sold that home or you mortgaged out, but we already own this home. You can't do that, right? So title insurance is something that you are paying so that the lender can feel comfortable with all this, right? You can't get around this. Every home must have title policy on it. Okay. Underwriting. Wow, that's a big word, right? Underwriting. The process of evaluating a loan application to determine the risk involved for the lender. Underwriting involves an analysis of the borrower's creditworthiness and the quality of the property itself. So underwriting. It's the segment of the loan process that determines the risk of lending you money to purchase a home. If you can't pass underwriting, you're not purchasing a home with them. So it's a very critical time period. I tell customers all the time, when you're in underwriting, there's lots of things going on. We may need documents quickly in order to make sure the process is seamless as possible. Lately, capacity issues or having a million loans coming through and you only have like a few underwriters looking at stuff, it's really tough, right? So if you miss something in the beginning and you have to get back on the line because you have to send it back through, but you're behind 100 people now, it's really an issue. So I tell customers all the time, because underwriting is a very the final part of it. When they say you're clear to close, you need to make sure you're abreast of everything and watching your emails and getting back to your loan officer or processing people as quickly as possible so they can help you with closing. Yep. Thanks a lot for staying tuned. If you have any questions or comments, please do me a favor. Like, subscribe, and follow me. I'm here to help. These are just some of the buzzwords that are happening today. I was going to go into a live group on Facebook and see what kind of chat that's going on in Facebook, just to see what's going on. And but we'll save that for another time. Thanks a lot for tuning in. My name is Alex Sung, your new home know-it-all. Have a great day.